morning. I'm Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Jill Malandrino with The Street, and together we bring you the Morning Call Express. Well, Scott, yesterday was a fun session to say the least. We saw month-to-date gains get erased, so I think today it's going to be really important to focus on. Does this actually hold, or can we open up and maintain what the futures are suggesting right now?
Right now, the futures are up about 10 to 12 handles. And yesterday was a very potent down day. One of those days that I say it's a day to take notice, a day to see what happens in the next few sessions to figure out short-term market direction. Yesterday didn't mean like game over for the bulls. It didn't mean the rally is over. It just meant, you know what, if you have excessive positions that you have on, figure out what your risk is, figure out if you're willing to commit to that risk moving forward, or you have to lighten up. And if you look at the chart of the S&P, you'll see that it was a potent down day, but it wasn't, again, one of those days where you had to just run for the hills and say, I'm done with the stock market. So if you look here at the S&P, let me show you what I'm talking about. You know, we've had a really big move off the lows starting in October. So yesterday, what did it do? It negated the gains for November, but all in all, we're still a lot higher than we were, you know, in the start of October. But what you have here is a very potent day, a day that engulfed the last 1, 2, 3, 4, 5 days. If you look what happened last week when we had those 2 distribution days, the 2 days after somewhat took most of it back. So what traders would want to see today is how much of today's rally sticks. We're up 10, 12 handles. If the market can get back above 1250 to 1252 and close above there, it will negate a lot of yesterday's negative action, and we could have a better composure moving forward. But if we open up 10, 12 handles today, and all of a sudden they sell it off and we go negative and some of the leading stocks continue to get hit, right, you'll know that we're going to have some more downside action coming up.
Right. Okay, well, we saw some support in the futures this morning. The ECB is going to go in and deliver some more support into the Italian bond market, which will bring the yields down. Again, we saw how well that worked for our country because, again, it's artificial support. We have a slew of economic data coming out, including jobless claims, import, trade balance data, and nat gas inventory. So we have a lot to look at in the session today. Earnings calendar is relatively light. Moving along into the sectors we're going to focus on our most active ETFs, including the Qs and the RTHs.
Yes, well, what I like to do is I like to check the temperature after a day like yesterday in the leading sectors, and I think they did take it in stride. If you take a quick look at the Qs, you'll see this upper wedge is still somewhat intact. If you take a look at the chart, you'll see, yes, well, did some of the bulls get trapped, like myself yesterday, when it looked like we were breaking to the upside and we went to the downside? It was definitely a dangerous type of day, but all in all, we're still above the support that's been holding during this entire time frame. We're still above the 50-day moving average. So all in all, not so bad. Just one of those days where you have to lighten up a little bit and then see what happens afterwards. So I would say the Qs can get back above, just say 57.50. It'll take some pressure off. If the NASDAQ goes negative today and starts moving lower, you better watch your support. This support will be key. Okay,
real quick, let's take a look at the RTH as a retail index because we're coming down the tail end of earnings season, and it usually ends with the retailers.
Yes, and since the retailers have been acting so well, you want to see if the leadership stays intact. So if you look here at the RTHs, you will see no breakout here. Again, this looked like it was going to be breaking out as of, what was that, Tuesday? So then, here you have Wednesday, but look where we are. We're still above the 21-day moving average, so that's still showing some strength. And we're way above the lower end of the range here and above the 50-day. So all in all, market's taking it in stride. Just have to measure your commitment level, whether or not you want to stay if some momentum leaves. And yesterday, a little momentum left.
Right, and into the trenches today for our long call version of the morning call, we're going to look at momentum names as far as earnings were concerned, and we're also going to look at Lockheed Martin, which will be our options profits play of the day.
Yeah, so just real quickly on those names, I just want to quickly show you Apple, because Apple could give us some clues what direction we're going to go. It's up like $3 today, but if you look here on Apple, you'll see it's still in this box. I've been talking about this box for a while, and it's been frustrating traders. I know that I took a lot of Apple home long thinking that it was going to get into this gap and fill it, and got blindsided yesterday, and we closed near the bottom end. So if you're trading long Apple, be careful. If it starts breaking below this 394, you could see it move down to the 200-day, which is around 362, and I think the 100-day is somewhere around 380. So I think traders are coming in today saying, you know what, Apple's up $3. It was really weak yesterday. I'm going to try and short this. If it goes negative and goes through that 394, you could see some pressure on NASDAQ. But if it bounces back above 400 and closes there, it's just like the status quo, and then we'll see what happens in the next few sessions moving forward.
All right, well, we have a lot to look at today. The market has a lot to digest. We'll see if it can support what futures are suggesting. We have a lot of economic data to also take into account.
Yes, and the way you measure the validity of a day like yesterday is the next day with the bounce. So let's see if we can take back 50% of it or not.
Okay, great. Thanks very much, Scott.